Gold and silver are pulling back, and the market is watching closely to see what happens next. Both metals posted losses in recent trading, putting the precious metals complex on the defensive. The big question right now is whether this dip is a healthy pause inside a larger uptrend or the start of something more serious. Gold has had a strong run this year, and pullbacks like this are not unusual after a period of elevated prices. The metal is sensitive to two things in particular: the strength of the US dollar and expectations around Federal Reserve interest rate policy. When the dollar pushes higher, or when bets on rate cuts start to fade, gold tends to face headwinds. The reason is straightforward. Gold pays no yield. When real returns are rising elsewhere, the metal becomes less competitive and money can flow out. Silver is in a similar spot, but with an added layer. It plays both a monetary and industrial role, which means it tends to amplify gold's moves in both directions. When gold falls, silver often falls harder. When gold rallies, silver can run even faster. Right now, traders are focused on technical support levels. These are price floors that have held in the past and carry weight with chart-watching market participants. If those levels hold during this pullback, it would be a signal that the broader uptrend is still intact. If they break, expect additional selling and a reassessment of near-term targets. On the flip side, resistance zones on any recovery attempt will matter just as much. A clean break above those levels would suggest bullish momentum is returning. The fundamental picture has not changed dramatically. Central banks have been consistent buyers of gold in recent months. Inflation concerns have not fully faded across the global economy. Geopolitical uncertainty remains a background factor supporting safe haven demand. These are slow-moving forces. They do not disappear in a few days of selling. That is why many analysts view short-term dips within a broader uptrend as potential entry points, rather than reasons to exit. One additional thing worth watching is the gold-to-silver ratio. This tracks how silver is performing relative to gold. When silver outpaces gold during a recovery, it is generally read as a positive sign. It suggests that industrial confidence and broader risk appetite are coming back to the market. When gold recovers, but silver lags behind, that points more to pure safe haven buying rather than across-the-board metal strength. The price action heading into next week will carry real information. Watch those support levels on gold and silver. Watch whether silver keeps pace with gold on any bounce. Those two data points will go a long way toward telling you which direction this market is leaning. Bullion Flash is brought to you by Absolute Bullion, a California-based dealer in gold, silver, platinum, and palladium. More at absolutebullion.com.